Good day and welcome to your very interesting program, Insurance Matters, brought to you by Transparent Protection Ltd by Guarantee, an NGO that is set up specifically to handle insurance issues and to bring about development within the insurance industry in Nigeria. My name is Isaiah Gere. I will be your host for today, standing in for Koswe Gede. And today we'll be discussing a very interesting topic that I think would be of use to almost every person in the society, especially the medium and lower class of our society. And that topic is how to use life insurance for savings. And to help us with that topic, we have somebody who is quite vast in that area, as usual. And the person that we have today to help us is the Abuja branch manager of Alliance Nigerian Insurance Limited, in the person of Mr. Abiodun Soroye. You're welcome, sir.
Thank you so much for having me.
Okay, thank you very much, sir.
Thank you.
So let's go to it.
Okay.
How to use life insurance for savings. Savings and insurance are not usually two words that most people use side by side. We usually see insurance as something you put in your money, and if something happens to you, well, maybe you benefit. But if nothing happens, your money is gone. So how does this relate? So let's look at this life insurance. So what is life insurance and how does it work?
Oh, okay. Thank you so much for having me. Well, I think I agree with you. The two words are actually, not related. But then, what is really life insurance? So to a simple layman, okay, for the understanding, you could say, so life insurance.
Break it down.
Life insurance is a transfer, okay, of risk from you who cannot afford it when the eventuality happens to a company, insurance company, who can afford it when the eventualities happen. So for example, in our economy now, you say 1 naira today is not the same thing as 1 naira tomorrow. And of course, at some point in time in our lives, death is inevitable. So the question is that when life happens, when death happens, so what is it that we have set for ourselves that we want to put on the table for our beneficiaries? What is it that we have set as a goal for ourselves that, oh, this will become, estate for my beneficiary, this will become this will become that. Okay, so life insurance happens to be, that through which you can, make life, comfortable for your beneficiaries, for your families, while you are alive, and also even when you are not longer there. It's an assurance of hope for a brighter future.
Okay. So what you're saying now is life insurance, or we usually hear life assurance.
Yes, please.
It's not only for people who die. It's for people who are still living.
Correct.
So I can take up life insurance and I will still benefit of it while I am alive. Correct.
So just as the mentality here is that just as you buy landed property, okay, just as you have you do a will and the rest, same thing for life insurance. And in fact, the most secure asset you can ever have is actually life insurance policy. Yes, because everyone have it at the notion that, oh, if you want to die, that's when you need to pick up a life assurance policy. But the truth of the matter is no. So life assurance policy will guarantee you will benefit while you are alive, will give you peace of mind and the rest. Then also when you are no longer there, okay, the future you have set in for your beneficiary will also be met. You see, because many times, especially in the region we find ourselves, we believe strongly that we have nothing to benefit from. So I'm just giving insurance company my money, okay. But then the truth of the matter is no, you will benefit while alive, and of course, when you are also no longer there, then your beneficiary will benefit.
Okay, that's interesting. We'll go into it more. So now that we've defined life insurance or life assurance.
Okay, yeah.
Now, how can we now relate life assurance to savings? So how can somebody listening, how can they use life assurance as a means of saving? Can you just break it down so we can understand it properly?
Okay, thank you. You know, the concept of savings, okay, when you draw it, or when you draw the concept from the banking world, okay, savings simply means that, oh, you put in your money, okay, in a particular specialized account, and so at will or at any time you can come and pick it up. So that is conventional savings. But then for relating savings to life insurance is that you are trying to set a future goal for yourself. You are trying to set in a future plan for yourself, such that you have a specific thing in mind, that, oh, for example, you have a brighter future for your children. You want to, you know, meet up like a building, a structure, for example. You want to set up a wonderful business such that even while you are alive, or even while you are no longer there, your beneficiary will be able to draw from those funds. So it's a future savings. And I'm sure when we begin to also look at the concept of savings, you will see that the conventional way in the bank, you put in your money in the bank, you expect interest, isn't it? Definitely. And some people will be asking you, oh, how many percentage and the rest. But then for the life insurance, you tend to have, you benefit much more than you put in. Yes. Of course, we all understand what is happening to our interest rate now in the country.
We didn't get anything.
No, you won't say you didn't get anything. Of course, there is interest, but then of course
the deductions are more than the interest.
Yes,
but that's not what we're talking about now. About insurance.
But then when you relate this to life insurance, you will see that you pay a stipend, a little premium, to secure a brighter and a bigger value for your family. For example, let's paint a scenario here that you've set yourself, okay, I want my children to be in so and so place. I want to have a particular house for them. I want to set up a particular business. I don't want my wife, you know, to mess up. You know, I want them to always, you know, get something. And so eventuality happen. Nobody plans to die, but then death occurs. So, but then when you have put in a life assurance in place, you are simply telling yourself that with or without you, that set goal that you have for them will be met. And same thing as we buy property, that, oh, we have the assumption property appreciate, not depreciate.
That's true.
Guess what? Life insurance policy is also much more than property. Yes, and I can break it down for you.
Go ahead. Please,
for example, if you buy a landed property, okay, it has been tested here in our nation that 2 or 3 people can fight over a landed property.
Okay, that's true.
But guess what? Nobody can fight over a life insurance policy. Why? Because it's a legal contract. So the deed, the beneficiary has already been stated from the initial. Nobody can come and say, okay, he or she is the owner of this policy. So life insurance is more guaranteed, in my word, than even a landed property. But then let's cover that.
You using the word guarantee, some people out there, of our listeners, may have issue with that word guarantee, because the perception that we have is that insurance companies are here to steal our money, and so when you give them the money, it's more or less gone because they won't pay the claim when the need arises. So if you are saying it's guaranteed, you are also indirectly now saying that, well, your claims are guaranteed to be paid.
Yes, of course. You well, unlike before, maybe some years ago, 20, 30 years ago, there about that. So many people are victim of insurance. Some companies where they don't get their claims settled on time and the rest. And so as we speak now, you can't even be talking about that. I'm not selling a particular insurance company here now, but then I can tell you for free that insurance company, they're actually settling claim. And so the essence of insurance is actually to bring about peace of mind, to bring, to guarantee your future, to secure the future. And so when you begin to look at this, you will see that, oh, and guess what? Even the premium that you paid in securing a higher value is compared to none, particularly when we relate it to life insurance policy. Because the truth of the matter is, as we sit here, you can't tell me when we are going to die. And so by virtue of that, it has been programmed that, oh, stipend amount will be paid. It could even be monthly, it could even be quarterly, it could even be annually, and rest.
So you can structure the payment system That's, say, if the person who takes up the policy dies, that the beneficiaries who receive the money, they can receive monthly allowances and so on, like that. You can structure payment like that.
Okay, no. So this is how it is. So when you're picking up a life insurance policy, okay, you determine the terms. For example, you determine how you will meet your obligation by paying the premium. So as convenient by you, you could say either monthly premium or quarterly premium or half-yearly premium or annual premium or even single premium.
Pay it all at once.
All at once. And also, where you can also determine how the benefit will be paid to the beneficiary. For example, in a situation where you have more than one beneficiary, you could tell, oh, insurance company, kindly pay 40% of this benefit to this my child A, kindly pay 30% to this my child B, kindly pay 20% to this my child C, kindly pay 10% to this my wife. You have that you have that right to choose that. But what is a need for the insured, which is the customer, okay, is that at his will he can determine when and how to pay, and also he can also determine the percentage that the beneficiaries will get.
Okay, I understand the part of the percentage. What I'm talking about now is, let's assume the sum assured here is 20 million naira.
Okay.
And then I say, okay, I want this 20 million naira split equally into monthly payments. And so my beneficiary should receive the money, a certain amount a certain amount every month until the 20 million naira is exhausted. Is that possible? Okay,
so under the life insurance scheme, you know, when eventualities happen, when death happen, then the insurance company will be looking at how to settle the beneficiary. Okay, and the ideal thing is that you know the whole amount of money that will be given. So it will not be in the insurance company interest, okay, to actually split how they're going to pay.
But
how they are going to handle it.
I can
so if you have already specified that term for insurance company that, oh, at my death, please let this be paid. Of course, the insurance company will abide by your terms.
Okay, so that's interesting. So you have heard it. You determine the terms of your life insurance policy. So now let us go to some specific policies.
Okay.
Since we're focusing on how you can save with the life insurance, let's not talk about the one when you die. So let's talk about the ones that you can benefit while you are still alive.
Okay.
So we narrowed it down to two that we think our viewers and most people will be able to benefit from.
Okay.
So let's look at the education savings plan.
Okay.
Can you explain that? How does the education savings plan work? What is it about?
Okay, thank you. The concept of education savings policy is directly to children. Okay, so we are trying to see how we will secure the future of our children education, and thereby the customer can, you know, set aside certain amount of money, okay, again at will, either monthly, quarterly, you know, half-yearly, and the rest, towards the education of the child. Now we call it savings here, okay, but then the savings is tailored toward a particular goal. So the mindset there is that the value of our currency, you know, what 1,000 naira, okay, can actually get for us in terms of value, it may not be same tomorrow.
We have seen a situation where the father did a life insurance policy some 1970 something.
Okay.
I don't know how long, but it was very long, and the sum assured was 5,000 naira. And so the man died, and they were going through his documents, and they saw it, and the sum assured was 5,000 naira. In that situation, how do you do it? Do they adjust for inflation, or do they pay you the exact same sum?
Well, you know, then if we are to relate this question to life insurance, okay, it will be that in some company policy there is what is called escalating, you know, sum assured, such that at interval, say at every 6 years, certain percentage will grow over the initial sum assured. For example, if the sum assured is about 5,000 naira, as you said,
which was big money,
you know, then it will be that maybe at every six years, you know, maybe about 10% would top it. At every, so like that, it could be that this escalating sum assured is not factored in with what you said, but then you can't blame what has happened. Do you understand? So the person just have to go. So it could also be that what happened, even if it's 50 million naira. You know, so that. But then to actually back to the question, so you now begin to look at the parent or the customer is trying to see to the, you know, the education of their children. Do you understand? And begin to set aside certain amount of money. And of course, in having that in mind, you begin to have you begin to have the cost. What could be the cost of education? For example, my child is about he is in class 4, for example. Now, okay, when he's getting to secondary school, how much he or she is going to spend? To university, what kind of university I want my children to go to, what will be the possible cost. You will have those kind of, you know, information. Then those things will inform your decision in how to properly plan for them, so that the case will not be like the one you cited. Yes, but of course, if you will say the education policy is an interesting policy, and it also tells the parent that they are actually, you know, they are trying to secure the future education of their children, which is very important now.
So I can take up a plan for my children and say, let's say in 5 years time, yes, let's assume my child is now in GSS 1. Okay. And I say I want to save up for the university education of that child. So I can say in 5 years, 6 years time, I know by that time he will be ripe for the university. Yes. So I can say I'll take up a plan for the next 5 years, yes, and then when it's 5 years time, they pay that money, and then you can use it to fund the education of that child. That's how it works.
Yes, that is how it works. And another thing is that you see at that time, okay, we are not saying that at that time maybe the parent will be broke, they will not have money, but then we are just saying that proper planning, savings towards yes, it, because you know there is a saying, if you fail to plan, of course you plan to fail. So it is even right time, you know, ample time to save. Let me also put something on the table here, that let's assume some parents now who are finding it difficult to actually pay the educational, you know, education fee, you know, the school fees of their children. Now, by virtue of assumption, let's say by this time 5 years ago they've had this plan, and all of a sudden they discover that they have about 10 million naira in their account. What do you think will happen? It would change everything. So we have some student today, you know, some parent today who is not actually in their will, okay, they desire that their children will go to a particular school, but because of, you know, what they find themselves, they have to, you know, go lower, you know, to the education they can afford. And so that is why I think it is very important for parents to actually have this, you know, plan in place. It is not late, though you don't have it yesterday. But then it is good that we are hearing it now. It is not late to have this plan in place for the purpose of securing the future of our children.
Nobody knows tomorrow.
Yes.
You may be broke. You may be dead. No, we're being realistic.
Yeah.
And even if you have the money, as at that time, having a life assurance policy or like a education savings plan would lessen the burden for you at that time.
Brilliant.
You have saved towards it. So I think it's a welcomed idea, and I think it's one that our viewers should be looking at, the education savings plan. But there's also another one, the endowment.
Oh, okay.
What is that about?
Okay. It's tied to the life also.
Let me our phone numbers will be showing on the screen now. If you want to participate in discussion here, you can just call that phone number, or better still send a text message. So okay, they are up now, so you can go ahead, sir. Endowment.
Okay, good. You see, when we're talking about life insurance before now, you know, we related to the fact that there will always be eventualities, okay, and that the customer will benefit while alive and even at death, okay, and also we pick up a education savings such that you tailor it towards securing the future, you know, of your children's education. Now, endowment is another wonderful policy okay, it's also tied to life insurance policy, such that the endowment will give you access to a benefit per term, not until when it matured or not until you die. So you will get the benefit per term, depending on the way a particular insurance company structured, their policy. So it could be assessed, the benefit could be assessed, for example, at the 2/3 of the policy term, or at the 1/3 of the policy term, 2/3 of the policy term, and even at maturity, depending on the way. So the endowment policy gives a customer a kind of a comfort and assurance, hope that though the policy may not have expired, but then you will be enjoying the benefit while the policy is running, and that is how beautiful.
Let's see if we can take this caller. Okay, we lost that. Okay, it's interesting. Are you saying now that the endowment plan is like a retirement plan?
Okay, so depending on how we tailored this, depending on what inform our decision, some could say that, oh, I want this policy to be a retirement plan for me. But then there is one lovely benefit in endowment that perhaps is not maybe in education savings. In education savings, you have to wait till a particular period at maturity. But for endowment, you enjoyed it while the policy is running. And that's how the beautiful thing about the endowment policy. And of course, you can also say, you know what, let me leave it, okay, until the policy, fully matured. Then you enjoyed all the entire benefit. But then, just as we established that death is inevitable, during the course of you, running that policy, death could happen. It then means that what is due to you, it will, also be given to, your beneficiary.
Okay, let's see if we can take this call. Hello, your name and where you're calling from? Okay, well, it has been interesting looking at these various savings plan, the education savings plan and the endowment policy. So we have been able to establish now that you can save with your insurance. Insurance doesn't necessarily have to be about your car, or even when you die. You can also be able to benefit from your insurance policy while you are alive. So let's see if we can also take this one. Hello? Yeah, your name and where you're calling from? Okay, we lost that, but it's fine. Now let's look at this finally before you go.
Okay.
Saving with an insurance company.
Okay.
Why is it, or how is it different from saving with a bank?
Okay.
Why should anybody decide, I think I should save with the insurance company rather than keeping the money in the bank?
Okay. So let's establish the fact. Okay. So savings in the bank is also very good, but then what do we tend to achieve when we save in the bank? Okay. So one of the features of savings in the bank is that, one, you put in your money today, you can come back tomorrow and pick it up. Okay, so another thing you will enjoy in the bank is that maybe the interest rate, that of course we know the reality. Okay, then what you also enjoyed in the bank is maybe accessibility, and the rest. But then with the insurance company, it will not only be that you have assurance or guaranteed on what you have there, but there is also a life insurance tied to the savings, and that makes it very wonderful and very beautiful. Because, for example, we will not only say that you have so and so amount with the insurance company, but then insurance company tied a life policy attached to it, such that when eventuality happens, it will be a nice one for your family. Okay, aside from what you presently have in your account there.
All right. Okay, you have heard that. Let's see if we can take just this one call. Hello, your name and where you're calling from?
Yeah, good afternoon.
Good afternoon. You can go ahead. Your name and where you're calling from?
This is Charles. I'm calling from Barclays.
Okay, Charles. Mr. Charles, you can go ahead, sir.
Yeah, well, my question is this: what do you mean by insurance?
Okay, no problem. If you have been listening so far, our guest here have been doing has been doing a very good job explaining that, but we can always reach back to you later on that. It has been wonderful talking with you on this topic, sir.
Thank you.
So we have been able to establish now that you can save with your insurance policy, and you can enjoy it. You enjoy your life assurance policy while you are still alive. It has been wonderful, sir. But before we go, let's just do this. I'm going to mention three things about the insurance industry now, and I want you to rate it between 1 and 10, how you see it as it's going right now.
Oh, okay.
So let's look at it. Insurance penetration.
5
5
out of 10. Yes.
Insurance claims.
6 over 10.
6.
Yes, please.
And our health insurance penetration in Nigeria.
4 over 10.
That's 4.
Yes. And my rating, is based on the reality and the fact that there's still much awareness need to be done on these lines. Till today, we still have very few people who still believe that no insurance. They still have doubt in insurance. But then we have a couple of people that say, I'm not going to move my car without insurance. I'm not going to go further without insurance. So we still have more ground to cover in insurance world.
It's good. We still have more ground to cover, and that's why TPL is here. We'll always say, be insured and be assured of health. So it has been a wonderful time with you. We hope to see you same time next week on our program. And as we always say, be insured and be assured of health.
TPL, making insurance work for you.